What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. Happy Monday. Hope you guys had a great weekend. And I'm just going to check my levels here real quick because this Restream, which is my backend software that I use to stream to all different places, I just want to make sure that it's going out properly because they did just make an update. And it looks like I'm going out. Yes, so I am on YouTube, Rumble, Twitter, and Telegram. Telegram is the home base for the community, so check that out, guys. Good back and forth there. But anyway, on Monday is the Fundamentals Report Day. That's my weekly free newsletter that goes out to all subscribers over on bitcoinandmarkets.com. And then we go through it here on the live stream and just have a nice discussion. So let's jump into it. Share the screen. This is issue 301. And I had to share my screen with Telegram. Can't forget that. Sorry about that, guys. Okay, so we are here on bitcoinandmarkets.com. And let's go through this. So we start up here with a quick navigation. This is a longer free newsletter that goes out covering most of the sectors of Bitcoin and macro, the important macro that applies to Bitcoin in my opinion and with my kind of theories that I have out there. But if you are just interested in price, you can sign up and then you can just go to the price section every single week and see what's going on with the price. If you're only interested in mining, there you go. So, all right. Celebrating 300 reports. So this is issue 301. This started last week. I fixed this button, guys. This button was wrong for the premium, the first month of free premium. But you can get a free month of either the $5 tier or the premium tier. On the premium tier, I put out good technical analysis of the near-term, mid-term, and long-term price forecasts, as well as a bunch of macro stuff that goes out on the premium tier. That's at least once a week. And the $5 a month is to support the channel. It is also to be able to enter the price forecast competition that it runs every month. The first 5 days is the window to enter, and then it's the person closest to the price at the end of the month gets $20 in sats over the Lightning Network. So it's pretty fun. And also you get a clickable version of the Bitcoin prehistory graphic. That's one of my most famous things I've done in the space here. Let's see if I can go to this. Prehistory. It's bitcoinandmarkets.com/prehistory. And sharing the wrong screen with Telegram. Sorry, guys. Hold on. Which one am I sharing? This one. There we go. And now let me make that bigger for you. So if you guys aren't familiar with the prehistory infographic, I went through and it looked like just a regular timeline, a horizontal timeline. And then Dan Held copied it. He asked for my permission to copy it, but he copied it and put it in one of his books. And anyway, that's one of my most shared things out there. I still get weekly notifications that goes kind of viral a little bit on Twitter, where people are sharing it around. He did misspell my last name on it, but that's whatever. Anyway, this is a clickable version, or at least this PDF version with clickable links. If you become a member here, this one isn't clickable, but you can go and read about each one of these steps leading up, starting from Unix, TCP/IP, public key cryptography, all the way through economic fields. David Sham and all his contributions, Crypto Anarchist Manifesto. We have the starting of proof of work, cypherpunks being formed in 92, cypherpunk manifesto, different types of currency experiments, cybercash, magic money, cyberbucks, that became digicash, and the NSA, how to make a mint. All these things are linked here. This is a clickable thing if you become a paid member for $5 a month. Nick Szabo and Adam Back, their contributions, Wei Dai and B Money, and then all of this kind of culminates in Bitcoin's launch. And I should continue with this, like Lightning Network and stuff, but anyway, you get access to that. Let's go back to the report. All right, so let's move on. Snapshot of Bitcoin. Just a real quick snapshot. So weekly trend right now is consolidation. We'll take a look at the live price chart in the price section down below. Media sentiment is positive still. I did see some things about Kamala Harris's new platform that came out, and it didn't have any mention to Bitcoin. So that's a little bit more of a negative, but overall, it's very positive on Bitcoin. Much, much more positive. Just think, guys that have been here 10 years, just think back when we got in and how different the media coverage is. I mean, I remember hanging out on Bitcoin subreddit, and there would be maybe 5 or 10 posts a day, but these are from a very niche community. Okay. And we would get like one mainstream financial press article, maybe a month. And now it's a normal sector now. Now it's a normal part of the financial system or of the financial media. And so, yeah, it's extremely positive if you weigh it by 2014 standards. But anyway, it's still very positive. Network traffic is very low. We'll take a look at Mempool and all of that. Hash rate. Mining industry is struggling. We'll take a look at miner revenue today and reserves. Okay, weekly price at the time of writing was 58,997, just under 59,000. And week to week, so issue to issue, that is down just $200, which is not very much. It's been pretty much flat for this week. Market cap is 1.1 trillion. Satoshis per dollar, 1694. One Finny is $5.90. That's 1/10,000th of a Bitcoin. That's my denomination, and I'm not giving up on it. It will be adopted at some point. Mining sector. Previous difficulty adjustment last week, and this should be red, but it's green, negative 4.1%. Estimated adjustment is in about 8 days and at about 2%. Mempool up a little bit this week, 142 megabytes. And you can see that a little bit in fees here, just under $1 at 12 sats per virtual byte at the time of writing, but this is very volatile even throughout a single day. Low priority fee, you can save a little bit if you're willing to wait an hour at 66 cents. Lightning Network, man, guys, so this is depressing, but it's down 0.5% on the capacity that's in Bitcoin, not in dollars. And then channels also down 0.5% at 49,089 channels. So it lost 300 public channels out there. Lightning Network, man, I hope we go through a boom phase, but right now the last year at least has been just a slow decline like this every week. I bet it averages 0.5% down every single week on both capacity and channels. But I still hope it succeeds, and I use it for really. I mean, Noster uses it, and also the price forecast competition with the $20 in sats, that we use it at least once a month for that. But my main Bitcoin stash is in long-term cold storage. Okay, let's move down to the headlines. So these are Bitcoin headlines. Lackluster Q2 13F filings. I wrote about this this week. As the deadline approached, overall, there was only 2 billion of inflows into the ETFs total. So in the first quarter, we had 12 billion in inflows. So there was a lot more news. Who's buying in? Okay, there was a lot, the list of big names and big notable investors was bigger because it was $12 billion. Q2 was only $2 billion of net inflows, so the list was much smaller. However, there were still a few highlights. The state of Michigan, their pension fund dipped their toe in with $6 million in Bitcoin, and they are right next door to Wisconsin, who also increased their amount of Bitcoin by a little bit. But so those two states are now, their pension funds are now in Bitcoin. And let me just check my levels, guys. Had a sneaky feeling I was muted, at least maybe Telegram. No, I'm good. Okay. I will be answering any questions, comments, concerns you guys have, so put that down in the chat. Okay, Goldman Sachs, their investment bank, and they bought over $400 million. I think it was 418 million, something like that. But that comes out to roughly 20% of the quarter's total. So they bought 1/5 of all the inflows in Q2. Morgan Stanley bought an additional 184 million, which they already had like 160 million. So they roughly doubled their allocation. Large pools of capital bought MicroStrategy stock like the Norwegian Central Bank, the Swiss National Bank, Mitsui Sumitomo, one of Japan's largest insurers. They bought 39 million. South Korea's National Pension Fund bought 33 million, and Wellington Management, who they manage $1 trillion in assets, went in for 26 million. A lot of these allocations will increase, but interesting that they are going into MicroStrategy and not into the ETFs themselves. But then MicroStrategy just uses that and goes and buys more Bitcoin, or gives it the ability to raise money to go buy more Bitcoin. All right, so that's it for the 13Fs. Next topic is Elon Musk responds to Luke Dash Jr. And if you're not like kind of inside baseball in the Bitcoin space, you probably don't care about this. It passed you by. But yeah, it's not a major story, but it's cool. Elon Musk responded to Bitcoin famous Luke Dash Jr. in a thread about GitHub terminology, and that's all. So Luke Dash Jr., he has been a long time Bitcoin developer, core developer, and he is mainly famous, as far as I know, for being able to make SegWit a soft fork. So if you guys know, back in 2016, 2017, we had the scaling wars, or scaling conflict, scaling debate, whatever you want to call it. And for years before that, they knew they needed a malleability fix for something in Bitcoin that was in the transactions. And they also thought that they could add a little bit of capacity to the Bitcoin network. However, they thought it had to be a hard fork, and Bitcoin cannot hard fork. So it was never really going to get done. That was what kind of pushed other people to want the big blocks. So the frustration with not being able to get SegWit is what gave birth to the big block side of the house. And then Luke Dash Jr. came in and said, no, we can make this a soft fork, no problem. And so that's what he did, and that's what ended up getting adopted, because Bitcoin can't hard fork. Bitcoin can soft fork though. So he's kind of Bitcoin famous, and Elon Musk responded to him. So very interesting, in my opinion. Okay, next story, Bitcoin elasticity debate. If you guys join me on Friday, I did do a long thing on Bitcoin elasticity, but I did ramble a lot and go into a lot of weeds. So I think I'm going to redo that. Very, very short. I'll aim for like 10 minutes. So I'll probably hit 20 minutes, but you know what I mean, like a shorter version of that. But this debate does resurface every once in a while in Bitcoin, because Bitcoin is fixed, and every once in a while it bubbles to the surface. But this time it's centered around Jeff Schneider. I'm a fan of Jeff's work on the shadow banking Eurodollar system, but his thinking on monetary evolution is, in my opinion, not well grounded. I did a live stream reaction, blah, blah, blah. So here's the bottom line. I tried to sum it up very quickly. And look, it's a whole page. Jeff insists on the medium of exchange function as the defining principle of money. And I'd respond, what are you exchanging? Value? That means value or monetary premium accumulation to the asset precedes widespread use in transactions. So you can't use it as a medium of exchange before you have something to exchange, which is the store of value function. Jeff argues that the credit-based dollar beat gold because it was better able to respond to the market's needs for elasticity, and implies it mandatorily follows that significant elasticity is always what the market will choose. Of course, this is not how evolution works. It's not a straight line. There are periods where the environment reverts and prior adaptations will be selected again. And that's my main argument here, is that we will select a non-elastic money instead of a negatively elastic money, a money that is contracting. It'd be better to have fixed. So, okay, Jeff is unwilling to accept that elasticity is a double-edged sword. Money supply can expand in good times and contract in bad times. If you constantly expand, you get consistently high levels of inflation. However, at the end of a global credit bubble, when bad times dominate and deflationary pressure is the norm, people will naturally begin switching to a money that doesn't suffer from the backward cut of deflation or the negative side of elasticity. So that is kind of summing up the elasticity debate from my side. Let's move on. Macro. Actually, before we do that, let's jump over to the comments and see if there's anybody commenting. Dex Invictus back with us. What's up? Check out Telegram. A couple comments in here. Don't shitcoin where you live. What is that in reference to? Agree with your comments about the community in this channel. It definitely helped during the 2022 lows. Oh, thanks, Holovetsky. Yep. Yeah, that's a great community over here on Telegram. So if you guys, they're tuning in on YouTube, Rumble, or Twitter, jump over to Telegram, join the Telegram. Let's see how many members we're at right now. We are at 637 subs. Let's see if we can get that to 1,000 by the end of the year. That would be pretty awesome. Trying to grow the channel in all aspects. So if you are on Twitter, jump over to the YouTube and Rumble, like, comment, subscribe over there. It helps the show out. Okay, let's move on. Macro headlines are next. CPI was uneventful. So I did do a live stream last Wednesday morning about CPI and responded to it then. But here are my thoughts on this. So July CPI came in on expectations. Is that worded properly? CPI came in at expectations when rounded up. Now this is important, and I'll get to why. Hence, no major market reactions. Fed monetary policy expectations have shifted from 50-50 between 25 and 50 basis point cut next month to now a 77% chance for a 25 bip cut and a 23% chance for a 50 bip cut. However, people might not be aware of the fact that the actual month-over-month CPI was 0.15. And I said this during the live stream. I remember that I was like, well, we'll have to wait till these update because this isn't the exact number. 0.2 could have been 0.15. And I remember saying that because we were looking at the Cleveland inflation nowcast, the Cleveland Fed inflation nowcast. And they have been consistently missing to the upside by 0.1% month over month. Like that's a big miss if you think about it. So now they're 4 months in a row missing by 0.1% each month because they had it at, their estimate was 0.24 and it came in at 0.15. So really a 0.09% miss, but pretty close. Anyway, so that's a big deal because to get 2%, the way that they get 2% on a year-over-year basis is it's a cumulative of the month-over-month. So if we had 0.1% every month for a year, the year-over-year number would be 1.2%, just multiplied by 12. So if you take 2% and you divide it by 12, you get 0.166%. Now, this rounding crossed that line. So it really came in at 0.15, but it was rounded up to 0.2, which crosses this line right here. So I think that's something important that the market is kind of missing because they're just concentrated on this headline number of 0.2%. But anyway, let's take a look at this. This is all items, headline number, and you can see 0.15493%. And it'll probably be lower next month. No, I don't know. I don't know quite yet. All right, next. And this also Jackson Hole on Friday. So Jerome Powell will be speaking at the annual Jackson Hole Summit on Friday. I'll try to cover that as well as I can. I don't know if I will be live streaming it or not. It might be better to go back and just watch it later. I do expect it to be kind of a bland speech because he doesn't want to give anything away. I don't think he wants to signal the market is doing okay right now. There was that little, market panic that we had 2 weeks ago that I did correctly call a market panic and not like the start of some big sell-off or anything. And anyway, I think that if we would be at that point and it would have continued down from there, maybe he would have said something more. But at this point right now, I'm expecting it just to be pretty bland. So we'll see if I cover it. I'll definitely talk about it, write about it, but I might not do a live stream. Okay, Iran uncertainty has died down. I've not read much about the Iran threats this week. There was news about a massive naval mobilization from the U.S. Something like 1/3 of the U.S. Navy is now being deployed to the Eastern Mediterranean, or like the Persian Gulf and Gulf of Oman and maybe the Gulf of Aden, those places over there around the Arabian Peninsula. But that's a pretty significant mobilization. That's the only thing I've really heard about, which might have deterred any strike for now. It is likely Iran will launch a strike at some point in the future, but for now, things have died down. So all this uncertainty that I talked about last week as driving kind of these prices, or acting as a kind of a tamper on the Bitcoin price, that's starting to die down and go away. So that's an interesting point. Okay, next topic is Germany is pissed about the Nord Stream 2 revelations. And the original theory on Nord Stream 2 stemmed from Seymour Hersh's post blaming the US and Norway. And I think we've talked about that. We've at least talked about it on the community there. But, that came out about a year ago or so. And he was saying that his sources were leaning towards the US and Norway, not Russia. So that was kind of debunked right off the beginning. And then Germany, I think, has always leaned towards Ukraine, having done it. But, however, this week, a damning story from the Wall Street Journal, and you can check it out here. This is the archived link. Reports it was a Ukrainian plot, initially greenlit by the Ukrainian government, and then they tried to call it off, and they couldn't get a hold of them, I guess, or something. They were down in the water. So a group of men rented a small yacht and set off to blow up the pipeline. It's kind of a fantastical story. However, the Germans are taking it very seriously. So their reaction kind of tells me they know, or they have some evidence that leans towards this being the correct thing. They've issued an arrest warrant for the semi-anonymous person, Vladimir Z, that was in the revelations. This person was named, apparently. I could not find that name in the Wall Street Journal, at least the initial story, but they have been updates to the story, and so maybe those are in the updates. But anyway, this is the person that the arrest warrant was for, and that person was in Poland, but they have since fled. So Germany has now then rejected new funding to Ukraine, which is a gigantic deal, and is now demanding repayment for Nord Stream. So this is a developing story. It's a crack in the West versus, Ukraine, backing Ukraine against Russia. There's other cracks that are forming on the ground in Ukraine, but also from this administration as well. So all over the place, we see that Project Ukraine might be coming to an end. And let's hope it comes to an end sooner rather than later. But they might try to end it to say that they ended it before the election. That's a possibility, or at least holding talks by that time. I mean, they're running out of time. It's like 90 days until the election or less. So they are running out of time. But yeah, okay. Next story is that's it for macro. Let me get ready for the price analysis, and then I will check the comments. If you guys are watching on Twitter, make a comment. You can jump over to YouTube or Rumble and make a comment over there. Let's check Telegram. No new comments. All right. Well, we will just keep rolling. Rolling. Okay, price analysis. So you can get the professional tier where I make my long-term, short-term, and medium-term forecasts. But these are just kind of very brief look at kind of some simple technical analysis, some simple other things related to price. And then I give a very basic forecast for the next week. Like this is what I said last week. Overall, this week is less easy to say where price will go in the short term, other than simply spending more time at the $60,000 level. And that's pretty much what we have done. We've kind of been pushed down by this 20-day moving average. But we will come back to that. Okay, well, let's take a look at it real quick right now. And then we'll come back to that in just a second. So price has hugged the 20-day moving average downward. When there is a cluster of moving averages together, they create stouter resistance. This is due to the confluence of eyes at that level. Different traders will trade the 20-day moving average, the 50-day, or the 200-day. When they are all together on the chart, the combined sell-side pressure compounds. However, once the MAs start to diverge, as they are doing now, the price can break them individually. So now let's take a look at this. So that 20-day moving average is pushing us down. Price could break the 20-day moving average, pop up, and then hit the 50-day. But when we're up here in this section where they're all really tight, there's no way you can break them individually. You have to fight all the different trading strategies that are around these moving averages, and there's a lot of them. Okay, especially in the traditional financial space, that's really heavy into Bitcoin now. They use very simple things like the 50-day moving average. Okay, and so now that we're here, we can break them individually, which is much better. Let's take a look at the live chart. Yay, live chart. Share this tab. So not much movement from when I snapped that. Went back up here and tested this 20-day again, looking like we've got some movement. But overall, this is a very solid picture because we have this cross here in the MACD. If we take a look at the MACD and zoom in, it is a divergence. And it is also just popping above. This is on a daily. It's just popping above. If you guys can see that little blue line popping up over the gray line, turning bullish with the divergence. So this is a fairly strong signal, but we don't see that same divergence in the RSI, but we do see this kind of line forming right here. And when that RSI pops up, you know, it's going to break 50 and it's going to be up here in the bullish side of the house. So another fairly bullish kind of formation here we got going on. And yeah, get out of there. There we go. So that's the live price chart. Maybe we'll check it again before we sign off for the day. But let's go back to the report and see what I have to say here. For example, once Bitcoin breaks the 20-day, now trading strategies that buy the 20-day break will be added to the price approaches as the price approaches 50. Sorry, I'm going to go back to the live chart. If you guys aren't used to my live streams, I bounce back and forth to all these different things. But okay, so all the trading strategies, a lot of the traders will set up a ask like right below the level. So if the 20-day is at 59,456, they'll set up an ask at 59,400 or something, okay? Just below that 20-day moving average so that they make sure to get filled when they go up here. So if they're shorting, they'll short right underneath this side of the moving average. Same with the 50-day, same with the 200-day. And so when you're up here in this cluster, you're having to deal with all of those different people using the different different MAs to set their bids and stuff. So now we can break this 20-day moving average. And on the other side, we have the same sort of thing. People will buy the breakouts. So they'll go long on this side. And one of the people that is longtime technical analyst in Bitcoin, Tone Vase, his favorite trade is longing a new all-time high. Just long the new all-time high. It kind of bit him back there in 2021, but you know, that is he's back tested this for years. He's been a trader for years in traditional markets and in Bitcoin, and buying the breakouts of things is a good strategy. So a lot of people, if they're going to go short on this side of the moving average, they'll go long on this side of the moving average. Okay, so, and that will add more fuel as we attack the 50-day. But then the 50-day has the same sort of protection around it. It also has the rocket fuel on the other side. So as we are going back and forth in here, that's what we're going to see is we're going to attack each one individually as we move up. All right, now back to the report. Similarly with the 50-day, therefore, as it stands now, we should expect a battle with these moving averages and not a spike until after we break the 200-day at 62,800. And we'll see where it is by the time we break it. It could be over 63,000 because it is sloped upward. We can clearly see the next nearest source of liquidity on the 24-hour heat map at 59,100. So the price does get attracted to liquidity. And this heat map is showing where these liquidation points are, which is liquidity in the Bitcoin space, because I mean, there's kind of some different definitions of liquidity, but in this sense, it is the amount of tradable Bitcoin that won't move the price. So if you have deeply liquid markets, like real deep markets, you can sell a lot of volume and not affect the price all that much. There's not slippage. Okay, that's one definition of liquidity. There's also other definitions of liquidity, like just able to sell at all. For example, Bitcoin, if there's a crash over the weekend or bad news over the weekend, like say Iran does strike Israel or something, then Bitcoin is like the only market there available to sell because everything else is closed. And so Bitcoin is liquid because it's open. So those just offer those. But you can see that the most liquidity is up here at the 59,000 level that I was talking about. There is some growing liquidity down here. So it wouldn't be surprising if it dipped down to grab some of that and then went higher. But that's the 24-hour chart. And if we zoom out to the 1 week heat map, there is a glowing area at 60 to 61,000 of over 2 billion. I went in and counted all of these squares going up from the current price, and I stopped as I was estimating over 2 billion. So it's over 2 billion in liquidations on that one trading pair alone, and that is Binance, BTC, Tether, which should act as a major magnet. This would coincide with attacking the 50-day MA above, currently at 61.5. So this zone that I counted was between 60 and 61, and that is this first yellow band between 60 and 61. But you can see where the 50-day at 61.5, let's see, that would be about right in this dark zone, but this one is up here about 62. So we might get sucked up to there, bounce off, or something like that. But compare the top here, the top liquidity, to the bottom liquidity. This is much brighter, much more up there to attract the price. Okay, let's zoom out even further, and it starts to get even more interesting at the 6-month heat map. Here we can see the massive glowing liquidation level up at the all-time high. Looking at this chart, there is no place for price to go but to capture that liquidity. I think we'll be there faster than people are thinking. So you can see there's not much liquidity in this whole region on this 6-month chart. All of it is up here at the all-time high, and it's glowing, and people know it. Everybody knows it. Everybody knows this. The big money, I'm not talking every retail trader, but every major whale knows this liquidity is up here. So that's a huge magnet for price, and it could happen much faster than people think. I mean, just look how fast these moved. Very quickly up. Big days, big day, very fast up. I mean, we could see a very fast spike over a week or two up to new all-time high. Okay, overall, there is a clear path for price on the technical side from here to the all-time high. As the moving average cluster separates, Bitcoin will be able to break them independently. Fundamentally, Bitcoin is bound to hit a supply crunch soon. People have become accustomed to 60,000, and Bitcoin has been distributed from people taking profits to those accumulating. Therefore, the stage has been set for a new all-time high and beyond. Over the next week, expect the battle with the moving averages to continue, with no spike higher until breaking the 200-day moving average. All right, so that was price. Let me see if there's any comments here. Just got to always check. Trying to be a good live streamer and check for comments. If you guys are on Twitter, jump over to YouTube and YouTube and Rumble to make comments. If you can also make comments on Telegram. All those links are in my pinned tweet, so you guys can find that there. All right, let's continue going with the next section. Next section is the mining sector. Start with headlines, and then we go into some of the technicals. Bitcoin mining profitability fell to all-time lows in August, JP Morgan analyst says. This week, JP Morgan is out with their analysis, namely all-time low for miner profitability. And this is quoting from the article that I link in the bullet points. If there is something to link, I try to link it in the bullet point for you guys. I also like to link archive links and not directly to some of those websites, especially shitcoin websites like shitcoin casino sites. I don't like to link to also enemies of Bitcoin. Like I try never to link to bitcoin.com, CoinDesk, those types of players. So just a heads up on that. Here we go. Quoting from this article and JP Morgan, Bitcoin mining stocks gave back artificial intelligence related gains in the first 2 weeks of August as the network hash rate rose, which pushed mining profitability to record lows. The hash price, a measure of mining profitability, is still 30% lower than the level seen in December of 2022 and about 40% below pre-halving levels. And this could slow hash rate growth in the near term, the report added. Yes, but what if price spikes? So these are all like best laid plans, right? The best laid plans of the central planner or of the person trying to predict the Bitcoin market, because it is so volatile that if Bitcoin doubles in price, which it easily can do, all of these other predictions, like could slow hash rate growth, are just wasted and stupid. They appear stupid in hindsight because, yes, it's 30% lower, but guess what? Price rises 30%. It's the exact same, right? If it's 40% below pre-halving, well, it can move 40% in a week. And then it's not. All right. So anyway, that's what JP Morgan says. They're always kind of behind the ball as well. I think I don't know what their process is and all that stuff. If you guys want me to join your team, just hit me up on my DMs. But no, I don't know what the process is, but they seem to be like a month behind, maybe more. But a lot of these like traditional shops are very slow moving. And I mean, they do have their main shops that do like S&P 500 or they're doing AI stocks or whatever, but their Bitcoin people are probably behind the ball on this a little bit and writing a headline that should have been maybe written 2 weeks ago. So anyways, last week I included this chart. Here is an update. The bottom for miner revenue was on July 23rd and has been slightly up since. So again, July 23rd is how long ago? 3 weeks. 3 weeks ago. And that was the bottom. And again, JP Morgan is now coming out with this analysis. They're 3 weeks behind where they should have been publishing that. This is on the CryptoQuant free tier, by the way. But you do have to register with an email and stuff. Okay, so let's take a look at this. July 23rd was the bottom of this miner revenue, and it has been ticking higher. Not by much. I mean, it's not like this big spike or this big spike or anything, but it is kind of rounding a bottom here. We'll see how this develops. Interesting that the price is down since then as well. Okay. Pure multiple. Now, I used to write about this when I wrote for Bitcoin Magazine Pro, and so I just grabbed this. I did grab this from CoinGlass, though, and not Bitcoin Magazine Pro. But the Peel multiple is a mining specific cycle indicator. Specific, man, a lot of specifics. It is a mining cycle indicator. Specifically, it is the ratio between the daily issuance in USD by, that should be and, the ratio between the daily issuance and the 365-day moving average of the daily issuance. You see the pain in the mining sector. This would be a good metric to look at. If you want to see where the pain is, I guess, check out the mining sector. So let's see this. And you can see the red is kind of the top section where it's getting overheated. That means that the daily revenue is multiples above the 365-day moving average. Right now, we're below 1. Okay, so the current daily issuance value in USD is below the 1-year moving average daily issuance. I highlighted the halvings, so you can see this big drop here. We're kind of going on a cycle. We bottom, come up, and we have the halving that drops us back down. Usually not back down to the green buy section, but we did here in COVID. That was kind of a special instance. But it does dip us down here below this 1 mark after the halvings each time. Above it, now below it. And this just barely was above it, then below. And now we're above it. Now we're below it again. So, and then what happens? It goes on the next leg. So that's the Peel multiple. Overall, looking at this, actually, let's bring this back up. The length of this right now is not like this one. So I would say not like the 2013 or whatever this was. It's a lot like this one, kind of longer, slower to turn around. The COVID kind of dipped below here, then back up, then dipped below again. Yeah, so this one was kind of faster, more volatile. This one is down and long and kind of rounding a bottom. So more like this 2017 or 2016 bottom. And, you know, we've been trying to compare and contrast what this cycle is going to be like. Is it going to be diminishing, continue on the diminishing trend? So the returns from the 2017 cycle were much higher than the returns from the 2020 cycle. And are we going to get even lower returns on this cycle? That's the diminishing. Or is it going to be more like 2017 than 2020? Or more like 2020 than 2017? Anyway, but if you look at this Peel multiple, it's looking more like 2016, 2017, after the halving there, going into the next leg of the bull market, the eventual rise of the bull market. So very interesting on that one. Let's continue. As you can see above, the red halving arrows, we talked about that. Okay, next topic is, or next story is, Mara completed its $250 million Bitcoin buy. And I talked about this last week, that they were going to be doing it, and then they did it this week. This brings their total Bitcoin reserves to 24,962. Note, this could be affecting the miner reserve stat. So back here, when I said that we're sloping up, interestingly, while the price is coming down, this little slope up could be due to Mara buying those 4,000 coins. Let's see, what would be the difference? I mean, you can't really tell on that, but 4,000 would be in the ballpark. So that's possible. That this is due to Mara buying the 4,000, the little tick higher. Okay, now let's read what they said here in their release. Well, that's pretty big. Let's go back to the small one. On August 14th, 2024, Mara also announced that during the period between August 12th and August 14th, Mara acquired approximately 4,144 Bitcoin, approximately $249 million in cash, using proceeds from the sale of the notes at an average price of approximately $59,500. So there you go. That could be due to that. Next topic Hash rate and difficulty. Okay, so despite the, couldn't get that to line up. Despite the revenue troubles for miners, hash rate has returned to an uptrend, the dark yellow line. Okay, so this brighter solid line here is the 7-day moving average, and it has returned to this upward slope. You can see the hash rate has stopped dipping down here to these lows and is, much higher. So this is moving up. This was helped by the difficulty adjustment of -4% last Wednesday, and that is this step down in the pink. So we had a 10% change here and then a 4% drop here, but the average hash rate is above that, so we are expecting a rise in the difficulty next month. Miners' bullishness is outweighing price over the last month. Did I read that right? Miners' bullishness was outweighed by price over the last month, which is an overall sign of market bullishness. So, yeah, hash rate dipped enough to pull the hash rate down slightly, but the price is down much more over the same time than hash rate or difficulty. So the miners are overall bullish. So they are their bullishness on the fundamentals has outweighed any price effects, which overall itself is a bullish sign. Okay, next section, Mempool. Mempool has risen this week, but remains generally low. You can see the large batch of 1 to 2 sat per byte fees in pink, which represents the vast majority of transactions in the mempool. This is generally bullish as well. A bearish mempool would be one that is spiking as holders rush to make transactions. You can see an example back here of this big spike. We're growing, and then boom, spiked right there. So that's a volatility spike. And here we don't see really any of that. So it's just nice and calm in the mempool, which is what we want for this stuff. Okay, next section, layer 2 and miscellaneous. So Bitcoin sidechain developers release white paper for BitVM2. I don't follow this a lot, but this Alexi right here in this tweet, very good TLDR. I recommend going to read that if you want. It's about 1 page worth of tweet there. Actually, let me just bring it up. Let me just do that. I won't read it all, but I'll just show you guys. So he has TLDR. He has talking about what is BitVM2, the bridge, the tech TLDR, VM protocol Eli 5, the bridge Eli 5, for tech geeks, what's next. And so, yeah, pretty comprehensive summary there. So you guys can check that out. I also just added this Eli 5 for the protocol from that tweet down here. So that is all, guys. There are ways to donate. Oh, wait, let's do this. In case you missed it, just put all my other posts down here so you can check it out if you missed something this week. But there are ways to donate. You can donate straight on Strike or Cash App. There's also ways to donate via wallet of Satoshi if you are using Nostr and things like that. So anyway, let me check the comments, see if any else were made. If not, we're just going to bounce out here on a Monday. No comments out there. So guys, thank you for joining me. If you're watching on YouTube on Twitter, jump over to the YouTube and Rumble. Like, comment, subscribe over there. Help me grow that channel. I appreciate that. Also, thank you guys for joining me, and I'll see you on the next one. Peace.